Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates and 10-year note yields. Consolidating, finding a home, however you want to call it. We saw little blips of movement, but we'll end the week right at the midpoint of the May high-low range, which is right around 293, 294. Not forget, we did make a run at 3% this week, and we failed. Likewise, we saw last week's move lower in yield. It didn't hold. It was very short-lived. Market right now seems to be clinging to two levels in 10-year yield. You're looking at 310 to the upside yield, downside price, and you're looking at 275 to the downside yield, upside price. Those are the levels that we have to see a breakout move, and if we're going to see it, it's going to likely come next week with all the data that we have. So right now we're right at the midpoint of that. Doesn't seem like the market has really any bias going into the weekend, especially when you talk about G7 and the summit with North Korea and Singapore. A lot of geopolitical risks are going to be added to the inherent data risks that we get next week, and the market right now is in wait-and-see mode. So right now at the midpoint of the year-to-date range, at the May range, of the May range, as we head into the weekend. And if you look at market volatility, massive week of data coming out next week. As expected, volatility is higher, but we're not seeing a massive bid. We're not seeing a fear bid. It's maybe just a little bit of a nod. Yeah, we've got FOMC. That's going to be the king. And I think that right now, given the fact that volatility has fallen so much since that big spike we saw about a week and a half, 2 weeks ago, it's odd that we haven't seen a bigger move, because we can obviously see the uncertainties here, not only with the global meetings and monetary policy meetings next week and data coming out in the United States. There's a lot going on right now, and a lot of winds could be pushing in different directions. And I'm a bit surprised that volatility isn't higher. And let's talk about what's coming out next week. I think we start the week off running. We get inflation data with CPI and PPI. We get Treasury auctions next week with amended schedules to abide around FOMC, and then we get June FOMC, and June FOMC brings with it press conference, forward guidance, dots, plots, and all that, and we're going to hear from the Fed chairman. And then we also get, after that, the next day, we get ECB and BOJ. So there's a lot going on here, and throw into that the summit with North Korea on the 12th, and any fallout from the G7 meeting this week and this weekend. There's a lot of things that can happen. The dollar's fallen off a little bit. We've seen gold prices firm up. Treasuries have firmed up a bit, but everything's kind of waiting for this it moment. I think June FOMC is something we've been talking about for a long time. It's not necessarily this meeting and the hike that's coming. It's what the Fed projects afterwards. What does Powell say about the second half of 2018 and his what ifs? What if GDP comes in weak? What if inflation comes in high? What if? And those are the kind of things that he's going to be asked at his press conference, and will likely have to make an answer. Likewise, he's going to have to answer about the yield curve as well, and directionality of that. So right now there is a lot of what ifs up in the air, and hopefully we'll get some clarity, but not until Wednesday. This is Todd Colvin coming to you from the floor of the CME Group.